Welcome back, everybody. We have a lot to talk about in today's video after the FOMC meeting. Now, if you guys have been paying attention and watching a lot of these videos on this channel over the last really couple of days here, what we saw out of the FOMC meeting today should not have surprised any of you. We still saw Powell downplaying this growth slowdown that we are seeing, kind of talking about that PDFP number, which we are going to be talking about in this video here too, and really laser focusing in on those upside risks to inflation. Now, there were a couple of other really important comments that were made here that I think went under the radar for a lot of people that we definitely need to talk about as well. And as usual, we're going to be going over all of the latest pieces of news and the overall structure of the charts on some of your guys' favorite names, Palantir, Sofi, HIMS, NEO, so that you guys have a better picture of what to look out for going into the next couple of trading days and weeks here. So guys, before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it. I'll give you guys a second here to go down and do that. And again, if you guys never want to miss a video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. Now, again, super big shout out to all of the members of the private trading community and investing community that I have. Less trades, more profits. Again, you guys have been crushing it over the last couple of weeks here. I'll throw up some of the gains screenshots on the screen. Now, again, for the month of May, I'm running an absolutely insane sale. 50% off, not just your first month, your first 2 months to the private community. It literally comes out to $1 a day. You guys get access to all of the full-length educational courses, the private live streams every single day, the full watch list of stocks and cryptos that are about to explode before they do, the macro research reports, the single stock research reports, the weekly market research reports, the pre-market plans. Guys, the amount of value there is insane. There's only 5 stars for a reason, but enough of that. Let's get into everything here. So, as we all know, a lot of what's been happening just kind of in the broad marketplace here is the result in uncertainty rising as a result of this new trade policy, these new tariffs. And Powell is coming out and obviously reiterating that he is in no hurry and can be patient here. Now, what he also said was avoiding persistent inflation will depend on size and timing of tariffs and also inflation expectations. Now, when you think about inflation expectations, we have talked about this chart a lot here, where if you break it down by political party, obviously Democrats think that inflation is going to rip up to 8% this year. Independents are right around 6.5 and Republicans are at 0.4. All of these are, in my opinion, wildly wrong. But you might be asking yourself, well, if all of the data right now, like PCE came out at about 2.3% at the last reading, well, if people are thinking that inflation is going to run to these really high levels here, but none of the data is actually supporting that, what does that actually matter? How is that actually going to increase prices? Well, you have to think about how a lot of these developments and these expectations are actually going to drive purchasing behaviors. Now, when you have a situation where people think that prices are going to be a lot higher in the future than they are in the present, what do? Well, they would go out in the present and start buying a lot of those goods and services right now rather than waiting in the future when they're going to cost potentially 8% more or a significant level more than they are currently at right now. And that is one of the reasons why we have seen right here retail sales picking up a little bit as we get into 2025, because people are trying to get ahead of these potential price increases that could result from these tariffs. Now, the key word from today's meeting, and it's been a key over the last couple of really weeks and kind of the last month and a half here, is uncertainty. Now, with the current economic conditions, and we will talk a little bit about here, PDFP, real final sales to domestic purchasers, the sum of consumer spending and gross private fixed investment increased 3% in the first quarter compared with an increase of 2.9% in the fourth quarter of last year. Remember, everybody saw that negative GDP print for the first quarter. Some people were freaking out about a recession. Remember, that really was the result of imports significantly rising here, which is going to create a drag on GDP. Now, this is exactly what we were talking about when I was outlining for you guys Powell downplaying the actual effect in the situation that we have surrounding slowing growth. Because while you can kind of cast off to the side this 1/4 of declining growth here, well, if we start to see these tariffs stick, we could end up in a nasty, vicious cycle where unemployment starts to rise, prices start to go up, and we do end up seeing somewhat of a growth slowdown if we do not come to some sort of agreement with a lot of these other countries here, between the US and China and the EU and Canada, Mexico, all of these other countries here, on tariffs in the near future. Now, obviously, because of this uncertainty and the dual mandate that the Fed has, maximum employment and price stability, they are really focusing in on this potential risk to the upside with inflation here as a result of these tariffs and this new trade policy. And the statements that Powell was making today were a little bit more hawkish than he's been in the past. Federal Reserve Chair Jerome Powell says the central bank won't make progress towards its goals this year if the Trump administration's tariffs play out. Now, he also said, and I'm going to paraphrase this a little bit here, that he does see a path this year where the Federal Reserve does not cut rates at all. So again, even when we come over and take a look at some of these probabilities right now for rate cuts, this Fed Watch tool right now is pretty much irrelevant, I would say, because of the fast-moving nature of the current situation and environment that we are in. Next week, we could start getting more trade deals like Besant has been outlining for last week, which they said we were going to get trade deals then, and then this week, and then moving into next week here as well. It is possible that we start to get a couple of trade deals here, but we're going to need some significant movement in forward progress in order for this market to really get a better understanding of when these rate cuts could potentially happen here. So again, June, we saw that about a month ago, there was a 61.2% probability for these cuts. Now there's a 76% probability that there's not going to be the first rate cut in June. Now, July, these probabilities are stepping up a little bit more for that first rate cut, but this situation is going to be constantly developing. But that keyword at the end of the day is uncertainty. And this is why I've been kind of outlining these areas for you guys here, this liberation zone that we have been talking about, as an area to be very, very cautious in the market. You can be cautiously optimistic because yes, we can see some of these trade deals come out, and this could easily give a nice boost to the market. You could see some more fiscal policy actions that could boost investor confidence in this market in the short term. But the overall big picture macro situation has not changed, and it's actually in a slightly worse situation than we were in before that initial Liberation Day move. So in general, guys, just be a little bit cautious at these areas here. I would like to see a little bit of a pullback before taking on or initiating any new long positions here, or I would like to see a confirmed move over this liberation zone that we've been talking about time and time again here. Now, let's start talking about these individual tickers here. A lot of ones that everybody's very interested in, and some of them people have been making unbelievable amounts of money in over the last year and a half here. The first one that I want to discuss is Palantir. So again, as we all know, Palantir came out, reported earnings earlier on this week, had a pretty significant move down, even though they really knocked it out of the park with their numbers, with their percentage growth year over year, and a lot of the other different metrics, especially that rule of 40 metric there as well. Now, I've said it before, I've said it again, Palantir is overvalued right now. This is not one that I'm going to be going into and allocating more capital into right now. I do think that this one needs to grow into its evaluation, but I do think that that is very possible for it to do over the next couple of years here. Remember, the market is going to start treating this one and holding this to a little bit of a higher standard now because it is commanding such a high valuation here. Market cap $260 billion. Again, it is trading at some very, very aggressive multiples right now. And what you have to think about is just normal supply and demand. If this name just continues up and up and up and up, and we do not see these revenues starting to catch up, again, investors are going to be more willing to sell this name in the short term than they are willing to buy, especially on the institutional side, because they have to make a really strong argument as to why there is additional value to be squeezed out of this investment at those current levels, or really any investment. But again, some more positive developments here for Palantir. The president of Ecuador here began his agenda with Josh Harris, Vice President of Palantir, a key ally in the use of technology to combat smuggling, customs fraud, and strengthen institutional security. The digital transformation in Ecuador seeks to improve productivity, competitiveness, and quality of life through technology. Again, this is part of Palantir's global expansion initiatives, kind of helping out allies of the West here. And again, that can easily lead to more revenue growth for them moving forward. And then let's move on and start talking a little bit about SoFi here. Just looking at this chart, again, we were looking at that post-earnings consolidation setup here. And as a lot of you guys know, in the private trading community, not taking any new trades on an FOMC day here, we saw that initial breakout. It did fail. So again, I would still, especially after this wick that we saw today, if you are looking for SoFi to continue on upwards here, back up to that 1393 or 1450 area here, I would look for a little bit more consolidation in this range here before a further breakout to the upside, if that is going to happen. But as you guys can see here, we are just hugging that daily 10 exponential moving average here, slowly grinding to the upside after the volatility that we saw on earnings here. We also have a new kind of expanded partnership here today as well. Capitalize, the industry's award-winning platform for retirement account transfers, and SoFi, a member-centric one-stop shop for digital finance services, today announced a major expansion of their long-standing collaboration to help members easily find and consolidate their 401k accounts here. So again, guys, having SoFi, having more accounts, and again, one of the best things about SoFi is that when they are getting these new users, they are able to kind of sell them, cross-sell, upsell, downsell them additional products here, which is enabling them to generate more revenue per user there, which is an unbelievable thing to see. And then moving on a bit, I don't want to take up too much of your guys' time in this video here. Let's talk briefly about NEO. Again, we are seeing exactly what we have expected to after that kind of initial breakout here to the upside. After the aggressive sell-off, we are pulling back deeper into this very large range that has served as a nice area of support for us and demand over really the last year or so here. And again, the thing with NEO, we've talked about this before, I'll talk about it again in almost every video that we mention NEO, everything is going to come down to execution. I don't really think a lot of investors right now are fully trusting of the management, and if they are, they should probably go back and take a look at some of the management's comments in the past and see what results they've been able to deliver. Again, it's been a lot of overpromise, under-deliver. They have kind of outlined some cost-cutting initiatives, which are very, very good for kind of those steps forward to profitability moving forward here, but they are really going to need to execute on these vehicle delivery sales throughout this year and next in order to hit those profitability metrics here. And as we move over here, NEO had 5,100 insurance registrations in China last week. Again, moving down there, we did see some pretty significant growth here and nice positive momentum moving to the upside over the last few weeks with NEO, but that has started to kind of move back to the downside. Again, vehicle deliveries were negatively impacted by the May 1st through 5th Labor Day holiday in China. So it is possible that these numbers start to aggressively rebound over the next few weeks here, but again, we are going to have to wait and see. And the last one that I want to talk about with you guys is probably the biggest winner of this week so far here, and that is HIMS. After really a surprising initial reaction to their earnings report on what day was this? The 5th, on Monday here. Again, HIMS came out swinging Monday at open, had an unbelievable day on Tuesday, and then came out again today to tack onto those gains, up 5.82% here. What I will say though, to anybody that is looking at HIMS, if you just found out about this name, if you're interested in this one, right now, in my opinion, not necessarily the time to buy this one. You're really chasing at these levels up here. I would wait for a pullback, a period of consolidation to play a breakout from for some of those, either a trade or long-term share purchases here. You never want to be a chaser in the market, guys. Do not fall into the hype. If you see a stock that is making those significant moves in a very, very short period of time, what goes up must come down eventually. And again, after the movements that we've seen on HIMS really over the last 2 days here, I would expect this to be due for a little bit of a pullback from the lows on Monday here. We are up about 38%. That is very, very aggressive. And again, the price action here that we've seen is absolutely awesome. But I do think that this one could be due for a little bit of a pullback. coming into the near future here, but that could easily serve as a solid long-term buying opportunity for the future. So that is going to wrap up this video, guys. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos go live. But until next time, guys, I will see you. Peace.